We begin our Healthy, Wealthy, and Wise Monday with some money talk. This has been one of the longest and strongest rallies in the stock market in more than 75 years. And the big question a lot of us are asking is, when will the music stop? When you keep watching that 401k grow, you wonder if you need to make changes. So we called in financial expert Jack Lansing to join us this morning. And let's just take a look at those numbers one more time as we, take a peek. Up more than the Dow, up 200, kind of coming off its highs right now, up more than 200 points.
Correct.
But, you got to look at this. In March of 2009, the Dow was at 6448. Just ponder that. And then almost 9 years later, Jack, it's up above 24,000. That's
Correct.
huge.
Yes. And we've had basically, it's been like a 100-month-long rally. We haven't seen this only happen one other time since World War II, basically. So it's been a very long rally.
Well, so savers have to wonder when you watch these things, it's going to come crashing down or not.
Correct. Or as we say, when will the music stop?
Exactly.
And I think one message to get across to our viewers is a bull market does not die of old age. There's other factors that contribute to it. And the first thing, are we heading into a recession? That's typically what triggers a sell-off. We see no indications of anything like that. During the same period, net worth of average U.S. household has doubled.
So you're sort of suggesting that this bull run could continue, perhaps not at these gains every day, but we could have some nice gains going forward into 2018?
The economy looks pretty strong. A term I want to familiarize is there's something called the misery index, which is if you combine unemployment being very low with inflation being very low, the misery index right now is very, very low. And in that environment, typically you see very good reaction by the stock market.
All right, the tax bill coming in now for a vote, and that's not a done deal yet.
Correct.
Where's the market play into all of this?
Well, certainly for your average S&P type company, the level they're talking about of reduction in corporate taxes is definitely going to help strengthen earnings a bit more next year. Even if nothing else happens, you'll have that adding to earnings growth just by the tax cuts.
For people who want to invest or want to get into the market, are stocks too high right now? Is everything a little bit priced at their highs?
I don't, obviously we're at very high markets. The other point is, as I think I would ask you before, what could possibly go wrong at this point?
I was just going to ask you that.
So there's plenty of geopolitical things out there that could be happening, starting with Korea, what's going on with Russia, are we getting protectionist? And what we've been seeing is when the markets have a correction, they tend to recover very quickly right now. So I think don't keep sitting on the sidelines waiting for the big moment. I think you just have to find a way to average some money in and start investing.
Talk to your financial pro. Find a fund or something to get into that maybe would give you some exposure.
Correct.
And get in on the ride a little bit. All right. Thanks, Jack. We appreciate it.